How we're seeing at the market at the moment is that it's full of very good buyers and there's a huge shortage of stock. So there's a lot of pent-up demand from last year. So every time we take on something new to the market at the moment, it gets enormous interest, and quite often we get an asking price bid or certainly multiple interest in a very short space of time. I think one thing that's quite interesting is that the gulf between the good and the very good has really widened. People will pay up for best in class, but things which are just averagely good do languish, and we do have some properties which still are on the market after a 6 or 8 month period, which is very interesting.
I think 2021 was an extremely good year for everybody. And I think that that was the year that everybody who'd been holding back, a lot of people have been in long-term rentals, maybe 5, 6, 7 years, city-based people, hedge fund guys, venture capitalists and so on. And I think they decided in 2021 the market wasn't going to go down. That was it. So they're not that concerned that it's going to go up, they just don't want to buy if it's going to go down. So I think in 2021 there was a lot of activity. It was the best year that most of us have had for quite a long time. And obviously that activity also filtered through to the very top end of the market, and there were some very big transactions. It hasn't quite continued into 2022 in the same way, but that's inevitable because a lot of that pent-up demand was satisfied. But yeah, there were some big transactions.
Working within North London, we saw the uptick earlier. I think it was pretty much 2 months after lockdown. We, as estate agents, were back allowed into their offices. I think lockdown when we were in March, we were back in the offices in June, and Hampstead exploded as an area. I think that's because we are dealing with more of a local marketplace, and we weren't reliant on international buyers. And what we found is everybody really was gravitating towards green spaces, and a leafy green area Hampstead is. So we found people that were amidst lockdown in Marylebone and Islington, where you didn't have those kind of spaces, and coming into Hampstead.
So I think, yes, outside space is still prevalent in people's minds. I think, not least because of the cost of doing works still being high or higher than they were before because of all the transport issues that we've been seeing. This is definitely, people are definitely favouring modernised property, and it's the intelligent thing to buy because somebody else has paid for the work already. You don't have to spend a year or 18 months or 2 years or more even to get into the place you want to buy.
Well, certainly the developers who are still operational, they are buying up unmodernised stock, which the normal sort of owner-occupier purchaser doesn't want. And the reason for that is that they have cornered this very difficult supply line market as a consequence of Brexit.
Yeah, I mean, from our perspective, we've seen I think the end of the COVID restrictions. People are returning back to their workplaces, and I think that's driving the market. That's what we're seeing. We've definitely seen an uptick in activity. We've seen asking prices hold or go a little bit higher. Transaction levels are not where we want them to be yet, but we seem to be getting there. So we're quite confident for this year.
Well, as we speak, I think we've got a little impasse where people don't quite know what to do. You know, we've had Brexit, we've had Corona, we've got this Ukraine war. You know, all of those things have created a hesitancy. People in dire need will move their property asset around and sell it, but actually most people aren't.
We've still got a severe shortage of stock, even though the demand is slightly lower. So even when you know those that are currently for sale sell, there's not much to replace it. That will hold prices, and if anything, will give them a boost. They will rise this year.
You know, what sustains the prices is the shortage of supply. I personally think that we've got an artificial shortage of supply, which could be easily, in my view, resolved by dropping particularly capital gains tax, actually, fun enough, because that's the reason for people not exiting. If the tax was lowered to a more reasonable level, then people would exit more readily, and that would create a more fluid market. That would be the one I'd hit first. But also I think that stamp duty is an unfairly high tax. And of course the net effect of having a high stamp duty is it stops the number of transactions. And when you have fewer transactions, you then get less tax coming in actually, because it's not so much about the stamp duty itself or even the capital gains tax itself that it comes from a particular transaction, but all the VAT receipts from all the activity that goes around a property transaction. There's estate agents, there's solicitors, there's removal firms, there's interior design firms, architects. All of them are busy around a property transaction, and all of the VAT that they create far outweighs the actual stamp duty and the capital gains tax. And there are models to show this, but of course in the Treasury they are very reluctant to acknowledge that. But there are tax models that show it, and really frankly what we need as a nation is to drop our transaction taxes around property, and that would get everything going more fluidly, and in fact probably raise the amount of tax that is taken, which can then be spent on the good things that we need like the NHS and benefits for those who really need it.
I think the discretionary buyer has still not really returned. London is, still a great place, but it's taken quite a lot of knocks. So I think, for people have really got to be sure they want to be here. I think the overseas buyers, the stamp duty is quite a deterrent, and for somebody to pay 17%, they've got to be pretty sure that this is where they want to be, and for quite some period of time.
Is there a new buyer? The only one I can think of really are cryptocurrency guys. We're just beginning to have that come into our day-to-day lives, interestingly and notably recently, because some of them are actually now wanting to come out to remain more liquid.
I thought we'd have seen more Hong Kong buyers as a consequence of the British passport scheme. I know that they're here, but we haven't had a sudden significant uptick.
We were always waiting for the international buyers to feel confident enough to come back. We saw that really not before about September last year, and then that was halted a bit by Omicron, but we're now seeing again, particularly with the Chinese, Hong Kong, the Middle Easterns, the Indians, the Americans, interestingly, we are seeing that appetite back in prime central London. Just going back to your question, if you said there's a new trend, we are seeing American buyers quite strongly in the upper ends of the prime central London market, which was something we haven't experienced in great numbers before.